Okay, everyone, thank you for coming. I'll just give you a quick overview of Nemaska Lithium. Many of you probably already know the project, but we are a lithium project in Quebec, Canada. It's a hard rock project, and we're located. We'll have two locations. One will be in the northern part of Quebec, and that'll be the mine, and then the chemical plant will be further south in the Shawinigan area. So Nemaska is under construction. We are currently building a mine and an electrochemical plant, both sites in the province of Quebec. We are vertically integrated, meaning we're going to go from the mine all the way to finished product being lithium hydroxide in the case of Nemaska. We are projecting to be one of the lowest cost producers. And that's based on a good quality concentrate, which is low cost concentrate, and then basically an innovative way of processing, an innovative low cost way of processing that concentrate into a very high quality lithium hydroxide product. Because we are in construction, we are a near-term cash flow play, assuming that we complete our project financing and complete our construction. And we do have offtake agreements in place with, we have 3 offtake agreements that represent about 50% of our production, of our hydroxide production. So those would be with Johnson Matthey. It's a 10-year contract. We have a 5-year supply agreement with LG Chemicals, and we have a 5-year supply agreement with Northvolt, which is a Swedish gigafactory currently under construction. In addition, we have some very large major shareholders, one being SoftBank out of Japan, which owns about 10% of the company. With SoftBank's investment, they have the right to purchase up to 20% of our production, and that's sort of a right of first offer on 20%. So if you add that to the 50% that we have already signed up in terms of the long-term offtake agreements, we're about 70% sold. And in addition, we have another large shareholder in the government of Quebec through Investment Quebec, Resources Quebec. They own about 13% of the company. So SoftBank and the government of Quebec are close to 25% of our current shareholders. And we do have a phase 1 plant that has been producing and sending out product since February of 2017, and that phase 1 plant produces lithium hydroxide of a very high quality. And this year we started sending out samples to customers for qualification. So we did a project financing last year. We raised 1.1 billion Canadian, and that really came in several ways through several financial instruments. First being equity. We raised 454 million Canadian on the equity side. Of that, we did a private placement with SoftBank for 94 million. The government of Quebec came in for 80 million, and we did a bought deal led by BMO and National Bank for 280 million. We did a stream with Orion Mine Resources for $150 million. And of that, so all of the equity is done in the bank. That was completed. The stream, of that stream, we've drawn initially 75 million of the stream. So there's 75 million US still available in the stream that we can draw upon. And we put together a corporate bond package. So that's a corporate bond. It trades on the Oslo Exchange. And that brought in 350 million US. The corporate bond is such that under the terms of it, you can't draw on the bond until you've completed a cost to complete test. And the cost to complete test basically is an independent engineer that meets and reviews all of your construction progress to date. And every time you go to make a draw on the bond, you complete that cost to complete. And assuming that you have the necessary funds to complete the project, you can make your first draw on the bond. And so at this point, we have yet to draw on the bond. So 350 million is sitting in an escrow account, a U.S. escrow account. And then, as I said, there's still 75 million of the stream that's available. We spent about 300 million so far on the mine and the electrochemical plant, so 200 on the mine and roughly 100 million on Shawinigan. Those would be Canadian figures. We recently announced that we had, in our own internal cost to complete analysis, identified a shortfall of about 375 million Canadian. So that is still to get us into production. So that's not necessarily a CapEx overrun. Certainly that's part of it, but that is more $375 million on the $1.1 billion budget. So we are looking at getting that, accessing that cash through a number of different tools. We're looking at M&A, both at the project level as well as at the corporate level. So we do have a data room, and several groups are in the data room at this point, evaluating the updated feasibility study, which will be out in June. And so from an M&A perspective, I think we hope to shortlist some of the key candidates in the next little bit. And as I said, that could be at the project level, so at the asset, at the mine level, making an investment, or corporately. And so we're really open to all M&A transactions at this point, and we're in conversations with several groups. In terms of the other path would be to potentially look at adding more debt. With the updated feasibility study, we'll be updating our cash flow numbers and making sure, seeing if there is potential to add more debt. Our bondholders have been fairly flexible with us on that. And then finally, the other option would be in equity. And so from that perspective, we have looked to our existing major shareholders to see if there is support, and they have indicated that they would support equity. So we're looking to them to potentially keep their pro rata. So at this point, everything is open. We'll have our feasibility study out by the end of June or sometime in June. With that feasibility study, that would be, I think, the final document that would be needed from a due diligence perspective, and then we can move forward with our financing options. I think our plan is to try to have some financing solution in place over the next few months. So this is just to give you a quick idea of where the project is. The mine is up in Nemaska. The chemical plant is down in Shawinigan. We had originally contemplated producing carbonate as well as hydroxide. The new feasibility study will just reflect hydroxide, given the fact that all of our offtakes now are for only hydroxide, and that has always been our view of where the market is going. This to give you an idea of the progress we've made. This picture was taken in the dead of winter on November 14th. And you can see there's quite a bit of construction that's already happened. This was taken May 8th. So there's quite a bit of construction that's happened up at the site. The maintenance garage is up. Concentrator buildings are up. The domes for the fine ore tailings, and then the concentrate dome is behind the concentrator building. They're all up. And then in the crushing area, we've done a lot of work. I'll show you some pictures. So this is the crushing area, which is the primary and secondary crushers. And so a lot of the buildings for this area, the thing that had delayed some of this is we started construction in winter, so we weren't able to pour all of the concrete that was necessary for all those foundations. But now the concrete, now that it's warmed up a bit, we've got the concrete poured and construction is happening. In the concentrator, this is the inside of the concentrator, so we're about 50% complete in terms of the installation of equipment. So about 50% of the installation the equipment has arrived, and it's pretty well all been installed. The balance of equipment now that will be coming in, I think, will be skidding and just storing, because we have slowed construction in order to preserve cash. And then this is, again, some more pictures inside the concentrator. This is the Shawinigan. At Shawinigan, construction has stopped, and we are really working on the detailed engineering. So we're just continuing that. We're about 55% complete on the detailed engineering. By the time we go back into construction at Shawinigan, we hope to get that number to at least 70% complete on the detailed engineering. Again, at Shawinigan, prior to this, was really a lot of civil works preparing the building for different equipment that was going to be laid in there. So that's more in Shawinigan. And then I'll just quickly show you the phase 1 plant, which I said has been in operation since February of 2017. We've sent out samples to over 20 customers, and they would range from industrial greases all the way to battery chemicals. So that's a picture of the phase 1 plant at the top, and then those are the administrative offices on the bottom. As I said, a new feasibility study will be out in June, and all of these numbers will be updated. And then this is just to give you an idea of the type of quality of product that we've shipped. It's a high-quality lithium hydroxide product. This Leverton Clark is a high-end user. They receive product from virtually every producer globally, and so they have analyzed our product, and he has basically said that it's the best hydroxide that they have ever received. So they're quite, from a product quality perspective, quite pleased. So I think that's going to take me to the end of my presentation. I'm here for the rest of the day. If anybody has any questions, I welcome you to come by. Thank you.